Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
The University of Michigan sentiment data came out today, weaker than expected. 64.7 was a headline number. The consensus was 67.8 last month. 67.8, so a little bit weaker there. Let's break it down. Joanne Hsu joins us, surveys of consumers director at the University of Michigan. Joanne, what did the numbers tell you today?
Essentially, consumers are feeling less optimistic about the future. Consumer sentiment declined over the course of the month of February, and consumers do see that the outlook is looking a bit weaker than it was about a month ago. The main reason for this is that they're becoming much more concerned that inflation is going to come surging back in the future. Inflation expectations really got quite a bit worse, both in the short term as well as the long term.
So all 5 components of the index deteriorated, including a decline in buying conditions for big ticket items. How do you interpret, what kind of macro signal you get out of something like that?
Consumers are seeing signs of weakening throughout the economy. We see it, again, in terms of buying conditions for durables. So that's mainly because people are really worried that it might be too late to avoid tariff-related price hikes in the very near future. But consumers are also expecting unemployment rates to get worse over the next year. So they're seeing potential weaknesses in business conditions, in their personal finances, as well as in inflation and big buying conditions for big ticket items.
Are moves of this magnitude, again, 64.7 was the actual, 67.8 was kind of last month. It was also the consensus for this month. Are misses of this magnitude, are they common in your survey work?
What's a little bit unusual is that we're seeing declines across the board. Usually at the 5 index components, some are moving up, some might go sideways, and some might move down. But this time we're seeing all 5 index components all moving down at the same time, both inflation expectations figures getting worse at the same time, as well as unemployment expectations. This not necessarily saying people think things are getting a lot worse, but they're seeing concerning signs across the economy. Interesting.
And again, the University of Michigan 5 to 10-year inflation outlook, the consensus was 3.3% was the outlook. It came in at 3.5%. So as Joanne was mentioning, a little bit higher there, a little bit concerning. Joanne Hsu, surveys of consumers director at the University of Michigan. They don't just make good football players, they make some pretty good economists out there in Michigan.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Looking for some trends in the marketplace today. Just kind of a risk-off kind of day. The UnitedHealth news weighing on the Dow, certainly, but people trying to get a sense of economic data and earnings growth and all that good stuff. It looks like the Fed's going to be more or less on the sidelines for most of this year. Katy Kaminski joins us. She's a chief research strategist, AlphaSimplex group up there in Boston, Mass area. Lots of MIT stuff going on her resume. I don't know what's going on there. It's a lot of math, I think. Katy, thanks so much for joining us here. How are you guys thinking about these markets today? Where are you guys seeing interest, opportunity, value?
Well, to be honest, it's been a little bit of a reversal the last 2 days. We've generally been following that U.S. exceptionalism theme across multiple asset classes. And, it seems to be stumbling a little bit. And, the market is definitely a little concerned. Today really doesn't seem to be any different from that. So we'll have to see what that means, I guess, in the next few weeks.
How are you thinking about correlations between stocks and bonds right now? I know we said it was a risk-off day, but today we're seeing, people piling into treasuries, exiting stocks. I guess that could make sense with the risk-off theme, but we haven't seen that correlation kind of play out every single day over the last few months.
That's a really good point, because we actually have seen on aggregate positive stock bond correlation often more recently. And what that means is that the market is trying to figure out how much is inflation important, because that's what anytime the market's concerned about inflation, the correlation between stocks and bonds changes quite a bit. But today just seems to be a classic risk off type of day where, people are nervous, consumer confidence is down, long-term inflation expectations are up. So I think people are just a little nervous about what all this means.
Katy, one of the trades that's been pretty solid for a lot of people for a long time has been just buy the dollar. It was certainly part of, quote unquote, the Trump trade. We've had a little bit of a pullback in the dollar here. How do you think about that long dollar trade here?
Well, the long dollar trade, just had everything going for it earlier this year. You really saw, given the Fed being on the sidelines, that means that there's less pressure on the dollar. The idea that the U.S. was looking strong, and that was making the dollar strong as well. But as some of those narratives have petered out a little bit, or perhaps extended quite a bit, we've started to see some reversion in that theme this month. And so I think a lot of people are starting to wonder, could this theme come back, or is there just a lot of noise around a lot of the geopolitical and also the changes in the U.S. administration that could sort of shift dynamics?
I actually have a colleague on the FX team who asked me today, have you seen anyone turning bearish on the dollar? So maybe I'll throw the question to Katy. Is it time to turn bearish on the U.S. dollar?
That is actually a good question. I think people are asking that question, especially versus things like the yen, where there's a more clear narrative, where, BOJ is doing something different. But I think the question is this just a reversion from the consistent theme, or, have we kind of shifted course? And so far, it doesn't look like it yet, but there has been some indication that the dollar is backed up, particularly this month.
Another trend that's been pretty pervasive has been gold here. And the Bloomberg Intelligence commodity strategist, Michael McGlone, has said for years and years and years in terms of commodities, buy gold and short everything else. I guess the fundamentals for gold look really solid.
Yeah, gold has been one of the tried and true trades for trend in the last few months. Of course, it reverted a little bit this week, but there just seems to be a lot of structural reasons why people want to hold gold. There's a lack of supply of gold. People don't want to loan out gold. So it just seems to be sort of that safe haven that it, especially in a world where there's, more of supply chain and other, issues globally across central banks. So I think, gold seems to be your sort of safe haven asset, and that doesn't seem to be stopping yet.
I have to ask a question about managed futures, because Katy, you wrote a book about managed futures.
Oh boy.
And without getting too technical here, I do write about ETFs, and we have seen this year BlackRock, Invesco, and I also believe Fidelity file for managed futures ETFs.
Wow.
What do you make of this? Is this like a vehicle that should be in the ETF wrapper, and something that retail should be looking into?
I would say absolutely yes. It's a very exciting, and we wrote this really exciting paper recently about this new field, sort of the managed futures ETF, the rise of it. And what's exciting is, since there were changes in U.S. Transparency in the regulations for active ETFs, now there's a lot more ability to incorporate dynamic and active strategies in an ETF wrapper, which allows people to invest in such strategies on an intraday basis as opposed to sort of a typical mutual fund structure. So I think you're going to see a lot of opportunities for beta-like products that give investors access to a dynamic range of asset classes over time. So it's an exciting field, and something I'm super excited about. So thanks for asking.
Very good. Awesome. Who knew? ETFs for everything. Katy Kaminski, really? Chief Research Strategist, AlphaSimplex Group up there in Cambridge, Mass.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
The stock story of the day, UnitedHealth, off about 9% here. We've got some oversight potentially, some people probing, some regulators probing UnitedHealth. We want to get some of the details there. We go to Glen Losev, Bloomberg Intelligence senior equity analyst, covering some of these healthcare names here. Glenn, talk to us about UNH. What is the news today moving this stock?
So the news, good morning, first of all, good afternoon. The news basically that the Wall Street Journal broke a story that there is a Department of Justice investigation into Medicare Advantage upcoding from UnitedHealth Group. Upcoding means that doctors usually upcode the diagnosis, make diagnosis more acute. So companies like United, for example, or any other Medicare Advantage plan get much higher payments from the government. And that's the issue.
How do you anticipate United is going to respond to this?
So United issued a very short statement saying that Wall Street Journal has been sort of pursuing, putting a negative spin on what UnitedHealth Group is doing and completely denied the accusations. That being said, Department of Justice is investigating, and we'll see how
common is it for, I mean, this goes to the heart of what an insurance company does. Diagnosis, submit, get payment. I mean, that's what they do. How common or uncommon is it for the government to look into these?
So these type of investigations are very common.
Common.
Or relatively common.
Okay.
This is nothing new. Usually, so investigations, the other thing is investigations can take up to a few years. Usually they are resolved in a settlement. Government is looking to make some money, and company just wants to put it behind them, and they settle.
What is the reputation of UnitedHealth? They're such a monster company. What's their reputation in the industry for this kind of stuff?
Well, it's very difficult to say, especially over the last 6+ months. The company has been heavily scrutinized after the murder of one of the executives. That being said, every company, as I always said, is there to make. Every business is there to make money. So, unless they're doing something illegal, which very difficult to prove, I don't think there's anything.
What do you make of the share price reaction? Is it an overreaction to this news? Because the company's Medicare Advantage division is kind of small compared to the overall business, right?
Right. So relative to overall business, it's pretty small, but United is the largest Medicare Advantage plan in the United States. That's one thing. Another thing is a lot of revenue comes from Medicare Advantage for United. And the other thing that I think the reaction of the stock where it is, even though I do think that it's probably an overreaction, which sort of, today's news adds to what happened over the last 6 months with the company, all the negative sentiment. But I also think that investors are thinking that today's announcement is sort of the Pam Bondi introducing herself, and also partly, the Trump administration's showing that federal agencies are not the only target of waste, fraud, and abuse DOJ agenda.
So you think there is a political aspect to this potentially?
I can't say for sure, but
what's the feeling about the managed care business in general? I see the stocks haven't been great performers. How's the market feel about the managed care business?
So, first of all, United sets the tone for the whole industry, right? It's the biggest company, and sort of managed care companies usually trade in tandem with United, sort of setting the tone, and everyone else follows. As United sort of has these issues that they sort of try to navigate, the whole industry is sort of under pressure, right, because of it. So I think over the last couple of years, medical costs were going up. Everyone is expecting medical costs to continue to go up. My thesis that they're gonna start to ease, because 3 years after the post-pandemic recovery began, I think there are less people that will sort of seek care at the levels that they did after deferring seeing a doctor during the pandemic. So that could sort of provide a tailwind for United. on earnings front as well as the whole industry, but we'll see how it plays out.
All right, Glenn, thanks so much for joining us. Really appreciate it. Glen Losev, he's a senior equity analyst, Bloomberg Intelligence, following those managed care companies, UnitedHealth, the big mover in the market.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Speaking of tariffs, let's get the latest here because it is a fluid situation. We know that tariffs are an economic policy that President Trump likes to employ in various ways. Enda Curran joins us, Bloomberg Global Economy Reporter. Enda, kind of where are we here on the tariffs? I mean, I think people are trying to get a sense of what tariff discussion is real, what tariff discussion is maybe just a negotiating point with other countries. How's the thinking around tariffs evolving?
Well, it's moving, and it's moving fast. If you consider the action so far, there has been a 10% tariff put on all goods from China. That's actually happening. It's real, and it's new because it's covering all of the goods from China, not just targeted. Then, of course, we have various executive orders that have been signed asking the Trade Representative Office and Commerce Department, excuse me, to go out and analyze how the US is doing business with the rest of the world. They're going to come back with a lot of reports by April 1. And this, in the meantime, we will see new tariffs go on steel around the middle of March, I think it is. So, yes, there is obviously some rhetoric and a lot of headlines, but at the same time, there is also concrete action that's happening. And we're seeing companies respond. We're seeing consumers respond. You just had Joanne talking there about the impact on consumer sentiment, and we're speaking to companies who make similar points as well.
Enda, you have a wonderful piece of reporting out on the terminal today, all about small businesses and how they're reacting to the prospect of tariffs and the tariffs that are already in place. Tell us about what your reporting showed.
Sure. Well, so the thinking when it comes to tariffs is that big multinational companies are better resourced. They can shift supply chains. They can adapt. They can maybe absorb some of the hit into their margins. But the real pain comes to those small business operators, those small manufacturers in the US who rely on, say, imported components from China and the rest of the world. And we found out. We spoke to a lot of these people. They make all kinds of products, whether from lighting to fasteners to tonka toys, and all of them made the same point that if tariffs on the goods they're bringing in at the port go up, then their margins are at a point, they're squeezed to a point where they can't absorb that, and they're going to have to pass those costs on to their consumers. So this is small business people warning about the hit to their confidence, hit to their investment plans, and the fact that they have to pass these costs along.
What's the feeling, Enda, about reciprocal tariffs? If in fact the U.S. does move forward on tariffs against certain countries, is just the expectation that almost a knee-jerk reaction to those countries will react and put tariffs on our goods as well?
I think that's the reaction function for trading partners. We've already had China respond. China's put tariffs on U.S. agricultural equipment going into China, for example, and they've put some antitrust investigations on US companies. The EU Trade Commissioner was in DC this week, and I went along to his events, and he was making the point that he came here to talk deals. They're happy to buy LNG, they'll buy soybeans, ready to bring down tariffs on US cars. But he also made it clear if that isn't enough, and tariffs go ahead on European goods, well, Europe will respond too. They have their list, he said, and their list of grievances, and they're ready to go. So this is the big danger that people make the point about. Yes, you can have headlines on tariffs. Maybe it's leverage, maybe you reach some kind of a deal. But if tariffs go in and you get this tit-for-tat spiral of a trade war, then ultimately it will weigh on business confidence and sentiment.
What are you seeing so far about just the extent of all of the talk of tariffs actually affecting inflation? Because you see headlines every day that, analysts are saying that the tariffs are going to increase inflation. And what is your reporting showing about just how business is preparing for the prospect of tariffs?
Yep.
How does that actually affect inflation?
Well, we're still early, right? The inflation story is still very much kind of about stubborn services inflation, I think more so than goods prices. But we're at a delicate point in the inflation story when, hang on a sec, wasn't it meant to be all about disinflation? But it looks like that might be a little bit rocky now. Throw on top of that the point that maybe there will be these tariffs going on typical consumer goods coming into the country. Well, then the thinking among economists and businesses, as I say, businesses are warning they'll have to pass it on. Economists say prices will go up, will have to go up near term. That's where it becomes more pointy. I mean, okay, near term prices go up, but what's the second round effect? Is it a one-off inflation impact that kind of policymakers and others look through, or does it set in chain longer term higher inflation expectations? Maybe that's the hint coming out of the Michigan survey today, for example. That's where the big economic crunch does come. But right here, right now, of course, companies and consumers warning what it means for prices, what it means for inflation, and longer term, what it means for confidence.
Very good. Enda Curran, thank you so much for joining us. Enda Curran, Global Economy Reporter, Bloomberg News, joining us from Washington, D.C. Via Zoom.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.